Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Rocket Lab, ticker symbol RKLB, which I did go over just a few days ago during the rough cut requests. And that was following the trading day of the 12th when we had this big green candle. And it was suggested, the reason why I went over Rocket Lab in that video, because it was suggested that we could be bumping into some resistance, basically the exponential moving averages. So I have those here. I have the 21-day and 50-day. I'm not sure if those are actually the best ones to use, but on that day, it did look like we were bumping into the 50-day exponential moving average, and that did look like it was acting as resistance. The following day, we did get a pullback, but then on the 14th, we did get a rally going up over 8% on the day and closing above the 50-day exponential moving average. So I do think that is really good, but you know what we saw today on February 15th, we saw kind of a blow off top, in my opinion, hitting a high of $5.04. And this could suggest that we will be seeing a little bit of a pullback. That does not mean I don't think we'll see a continuation. I just think that we're probably going to pull back a little bit, perhaps over the next few days before earnings. I actually think that'd be a really good thing. So then it could keep going up, following earnings. And then, so I'm also going to throw up the simple moving averages, and it does look like there is one, the 50-day moving average at a price of, let's see, $4.88.2. So right around where we closed the day, we actually closed just above that at a price of $4.89 on the day. So looking pretty good there. It's just that we've got this big wick to the upside that I do think could suggest we got a rejection. And I'm actually going to remove these averages, moving averages, and I'm actually going to throw up the drawings that I've done. And so with that, I did do a different Fibonacci retracement for this, going up to the high of the day, because I do think that's going to be a short-term top for a couple reasons. One, just based on the shape of the candle that we saw with that big wick up and the close in the lower half of the trading. I do think that suggests we will be seeing a little bit of a pullback. Also, because we did cross the psychological level of $5 a share, marked by this purple line. And so I had been thinking that it would get rejected at around $5. And so my target, I picked up, one share down here. My target for a swing trade was $5. And, I almost got spooked here. I almost got spooked on this red candle day. But I'm just thinking about the psychology of the market and how, maybe we got rejected here. But, I felt like, with the markets hitting all-time highs, stuff like that, there's going to be a little bit of a pullback to spook some investors. And that's what we saw on the 13th, on Tuesday, before a rally up and a close above the high that we saw on February 12th. So the high on February 12th was $4.79, whereas the close on Wednesday, the 14th, was $4.80, so just a penny above that high. And that's a good sign that there would be a continuation. We saw that today on the 15th, Thursday, but it does look like it's kind of a blow off top. And so I do think that it could be returning to some of these levels, and so I'll just go over those. But I do think it is really good that on our move up, we did fill the gap that resulted following this, I believe it was capital raise that caused the price to go down. And that's actually why I made the video a couple weeks ago, was because of this drawdown. And really that was just an overreaction. And so that did suggest to me that this would be getting filled. We saw that gap getting filled today. So mission accomplished in that sense. And also on our way up, we did completely fill this gap that was formed here between, let's see, December 21st and 2nd. So I do think it's great that we filled these gaps. So there's not really too much pulling us down to the downside other than just needing to cool off a little bit since we got this big wick up and we did get rejected from $5 a share, that being the psychological level. And so levels that I could see it returning to on the downside, so a retracement from this run up, could be the 236 at a price of $4.76.9, or the 382 at a price of $4.60.1. And so really, of these two levels, I do think it could settle out around the 236, but I think it's more likely that we get a retracement to the 382. And hopefully we can settle out there before earnings, and then we get a nice rally, following earnings, or perhaps, maybe leading up to it, and then maybe we get a pullback after earnings. It's tough to say. And so earnings are reported on February 27th, so do keep that in mind. Do keep these two levels in mind. But if we are to break below them, the 50% is at $4.46.5, or the 618, which is at a price of $4.32.9. That also coinciding with this uptrend that I have drawn here. As you can see, goes back pretty far in time. Actually, that's it's really just this parallel channel. I'm not sure. Maybe I drew that during a stream. And so, yeah, I mean, that is based on these touch points here on the bottom. And so that channel really does go back to, let's see, the end of 2022. And so price could be returning to that 618 right around there. But, I do think that, let's look at the volume profile. Yeah, I mean, we don't see too much. It doesn't look like we'll be getting into too much support until we get down to like the 382, around $4.60. So I do think that is a price we will be returning to. And if we can't hold that, if this volume shelf doesn't really hold up, at least at not the top of it, then we might be returning to, $4.46 or $4.33. But I do think those could be, dip buying opportunities if we do go down that low, because we do have this, uptrend, or the bottom of this channel. That could be support, but I believe I drew that during a stream. Let's see, is it locked? Yeah, it's locked. So maybe I took my time and drew that carefully, but maybe not. I'll have to update that next week. But yeah, I mean, I do think that we're going to see a retracement. So, for me, I'm bracing for $4.60. And for me, I'd start adding in there. Potentially, I did trim today, at $5. And that was just one share. But, I do plan on averaging back in at these levels and seeing where it takes us. I do think it's going to be a dip buying opportunity, and I don't think we have seen the end of this up move. I just think we need to see a little bit of a pullback first. But, those are just my thoughts. If you found them helpful, make sure you like the video and share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching.